Most traders use 5, 6, 7 indicators at once. Maybe they're using MACD, RSI, Fibonacci, stochastics, or now to be a bit more modern, even worse though, they're using fair value gaps, order blocks, liquidity sweeps. And of course, they're still losing. While professionals like me, since I've been managing capital for a hedge fund for years now, we are using a few tools. And the two tools I've used throughout my whole trading career, I trade since 8 years now, is the COT positioning, the COT report, and key levels. The COT report gives me a directional bias every single week because I can see where billions are already positioned by major financial institutions, while key levels tell me where to enter. That's it, nothing else. You don't need any more technical smart money concepts to actually make money. Everything else is noise. In this video, I'll explain you how both of them works, how to apply them, and why they are the only two tools that always made consistent sense to me. Let's get into it. Now, the problem of having too many tools is that you're basically overwhelmed because maybe one gives you a signal to buy, the other one a signal to sell. So you get in a point where you are paralyzed, you don't know what to do. Now, of course, this is too much. I just put all the possible indicators I could find on TradeMe, but if your charts look something like this, there is a problem because complexity doesn't create an edge, it destroys it. So the actual solution is not finding the right indicator or the right strategy, it's actually removing everything that is not essential. And by the way, I've been talking about the COT report on this channel for months now, and I get amazing feedbacks every single day. The COT terminal sheet that I've created and shared for free with everyone is already used by 600 people on this page and by almost 500 people, 551 on this other page. So more than 1,000 people are using it. And I'm having amazing feedbacks, and also specifically with this guy that was one of my subscribers and then asked me to mentor him one-on-one. He actually passed his first prop challenge and made his first payout just by using the YouTube strategies. So everything I'm trying to teach you on YouTube is for your own good. This is what I would have needed when I was in my learning phase, struggling and spending thousands on courses. Everything that you need to start to see profitability is already on this channel. As I said at the beginning of the video, the two main tools that I used to become profitable before building my own trading model were the COT report and key levels, because COT tells you the direction, key levels tell you the entry, and the entire system, it's basically this one. We have two tools, one direction, one entry. This is basically all you need. Now, specifically, how does the COT report works? And the COT terminal sheet that I showed you before, you will also have access to it, but to access it, you will need a code. You will find in the description of this video a link like this where you need to input a password, okay? After you input the correct password, you will get to this form where you just will put your name and your email, and you will get lifetime access for free to the COT terminal sheet, so you can use the same strategy whenever you want, like other 1,000 people. Now, this code, I will tell you throughout the video, okay? So pay attention. I'm not telling it to you now, otherwise you will jump to the COT and you will start to trade without conscience. You need to understand why we're doing certain things. So pay attention to the video. I will give you the code by the end. Now, what is the COT report and why we use it? I've made countless of videos on my channel. You will find one in the top right now where I explain basically everything. It's a masterclass, more than 30 minutes where I explain everything. But the most important thing is that it shows us positioning, okay, net position value. A summary of all the trades of the biggest hedge funds in the US, in the Forex market, and any other market specifically. What you can see here is that in the COT, I recently added also the S&P 500, NASDAQ, and the Dow Jones. So subscribe, because very soon I will also teach you how to use the COT report when you trade indices. The most important metric of them all are leverage funds. Leverage funds are the most important participant because those are speculative hedge funds. They work on the Forex market to make profit of movements of currency, like us, because for example, we have asset managers or dealer intermediaries that have completely different purposes. For example, dealer intermediaries, that is another participant you can see in the COT report, they just provide liquidity, okay? So they are not directional traders. Leverage funds are actually directional traders. Now, in the COT terminal sheet, we have plenty of data. You can also see how many dollars are specifically long and short on any single currency. For example, we can see here that we have $4 billion long on the Australian dollar this week. And in fact, we traded the Australian dollar this week. But if you go on the right here, you'll find another table, the LF Strength Index. This basically tells you every single week what is the strongest pair and what is the weakest pair. From this, we can actually trade. Now, we need some validation to decide what pair to trade, okay? First of all, the score on the LF Strength Index needs to be more than 25% to confirm a long trade, a buy, and less than minus 25% to confirm a short trade. If it's in between, we don't trade. For example, you can see here, Euro AUD, the score is minus 21.2%. I won't trade short this week because this condition is not satisfied, while AUDNZD is higher than 25%, so I can trade that. But before deciding the pair, we have still another validation to do. Of course, we would love to go long on the strongest pair and short on the weakest pair. But another validation that you need to do, and people usually skip this, It's to filter with the economic calendar. Now, the overall idea that you just need to avoid to trade when there are news coming out because the market gets volatile and unpredictable, to me, it's stupid, because the market is actually predictable if you know what to look for. I trade mainly with fundamental analysis, so this is what I do. But in general, where you're not into macroeconomics yet, you're using the COT report to basically grab the researches of all the hedge funds that you see on the COT, because all the trades that you see open on the COT report are trades that, trust me, are driven by fundamental and macroeconomic analysis, okay, that hedge fund did. No hedge fund trades with technical analysis, smart money concept, not even volumes are that widely used on medium and long-term trading. You can use them on the short term, but the big moves, the moves that drive 100, 200, 300, 400, 500 pips, the one we like, are driven by macroeconomics. Now, the validation is this. To confirm a pair, you must see that in the second currency of the pair, so for example, in AUDNZD, the second currency is NZD, the New Zealand dollar, we must not have 3-star news before Friday. If we have a 3-star news on Friday, it is no problem. But if we have a 3-star news on the economic calendar before Friday, we can't trade that pair. Now, as a side note, as I already explained in my masterclass about the COT, the report gets delivered every week on Friday, but it's based on Tuesday positioning, okay? So there is a 3-day lag, okay? So for example, to trade this week, now it's Thursday, and I will also show you a trade that I took this week. I looked at the position of the previous week for hedge funds. Why we do so? This is a question that I saw just 10 minutes ago under a comment in one of my videos. We use the signal that the COT report gives us, even if it's based on last week positioning, because COT participants, they're not doing intraday trading, okay? They're not day trading. They have position that lasts anywhere between 1 week to 12, 16 weeks, okay? So the positioning is long. They need to deploy hundreds of millions of dollars at market. They are not just like us that we can just click buy on the MetaTrader and the position is open. It doesn't work like this. So we have time. Now, specifically, this example on AUDNZD is took from last week, okay? Here it is. This is the actual screenshot that I took to put into the board to explain to you. Now, AUDNZD is at 51%, but we need to validate with the calendar. To do so, we go on Forex Factory, okay? By going on Forex Factory, this is the current week, I will go to the previous week, okay? So if I want to trade a specific pair, for example, AUDNZD, I do all of this process to decide my pair during the weekend, Saturday or Sunday, to then open the position on Monday and Tuesday, okay? I will look during the weekend what news we have for the next week. What I do, I go on Forex Factory, forexfactory.com/economic calendar, very simple. We click here on the filter, we put only 3-star events and we click apply, okay? In the previous week, as we can see, on Wednesday, we have 2 important news on the New Zealand dollar, so we can't trade AUDNZD. AUDNZD is not tradable. So what we do, we go back on the COT terminal sheet. What is the second strongest pair? AUDCAD. Okay, now we need to check if the Canadian dollar has 3-star news before Friday. So by going back on the calendar, we can see that yes, indeed, the Canadian dollar has 3-star news, but they are on Friday. It's good. The only important thing is that they are not before Friday. Why, you ask? Because usually the big movements, they happen before Friday. Friday, usually we can see inverse movements because these are most of the hedge funds taking partial profits on the first position that they issued at the beginning of the week. Okay, so if the 3-star news is on Friday, it's not a problem because 9 times out of 10 we are already outside the trade. With this type of strategy, trades usually last between 1 day to 2-3 days on average. All right. So in this example, AUDNZD at the COT confirmed was the strongest pair, but the calendar validation wasn't confirmed. So by moving to the next pair, we can see that AUDCAD as COT confirmed, the strength is 49.8, so higher than 25%, and the calendar is also confirmed. No 3-star events before Friday, so it's good to trade. Now, one question that you could have is why we're doing this only on the second currency, that is called the quoting currency, because we are trading in the direction of the first currency. The first currency is also called the base currency, okay? So every possible news could potentially confirm or invalidate our thesis. We don't need to filter this out. What we want to filter out as much as possible is additional volatility. We already grab a lot of volatility on the first currency. We want to limit as much as possible the additional volatility we can get on the quoting currency. So with this, we have our bias confirmed. Now, the other thing that we need to understand is how to actually open a position. First of all, we never trade against institutional positioning. Okay, so if the COT report tells us to go long on AUDCAD in that example, because we excluded AUDNZD, we look only for longs. And of course, the same thing is true in the opposite sense if it was a short trade. Okay, the logic is that central banks, economic data, risk flow, they've already done the analysis. The COT participant have already done all your analysis. Why we use the COT report? Not because COT participants are so big that they can move the market. They can create some movement, but the only player that is big enough to move the Forex market alone by itself is the central bank, no one else. We are using the COT report because by looking at their position, basically we are offsetting our macroeconomic and fundamental research analysis on them. Their positioning is a result of all the analysis analysis that they did. And again, trust me, they trade with fundamental analysis. So we are basically grabbing their researches without having to, go back and forth understanding macroeconomics. Then, of course, the next step is always understanding macroeconomics. And if you're interested in this, there is a link in the description. Now, basically what we've done is we stole the bias from hedge funds. Okay, now where do we enter the trade? Because of course they don't tell us their specific entry point. We need key levels. What are our key levels? Previous week open, high, low, and close. Those are the most important levels. We mark this every Sunday and we don't need nothing else. So for long position, we buy at a previous open, high, low, or close, the closest one that we have on the previous week. And the opposite, of course, we do for the sell trade, for a short trade. Why do we actually use these levels? Because those are the levels where institutional intention in the previous week either was built or was destroyed. So they are very strong levels that will always give a reaction. So institution defending a level that they created is not a prediction. Of course, for us, it's a strategy. It's data that can actually get us to a very high win rate. And again, the most important thing, guys, is not having a super high risk to reward ratio. As long as you have at least a 1-to-1, 1-to-1.5 risk to reward ratio, you need the win rate. What I'm trying to teach you here is how to manage your trading at 360 degrees. So your strategy, your positioning, your risk, and also your emotional state. Because again, we are humans. Another thing that is completely stupid that everyone says is that a trader should be stone cold. No, we are humans. So we need to manage our emotions accordingly. So you will find another video up here to go check it. Now, our retail traders usually draws an order block and thinks that they should hold. The pattern breaks, they don't know why. They study the facts, not the cause on the market, and they follow, forums. They try to find strategies on Twitter. They don't follow data. They do op-based trading, while us, we do data-based trading because we actually got our entry defined and our bias confirmed. So here we know that the COT shows 5 billion position here. Maybe it's too much, but something around this, okay? If the level breaks, we exit immediately. You're starting now, even if it's not directly, because we are getting this from the COT positioning, the real cause behind market movements, not the effects. Again, the cause is macroeconomics. And we follow real smart money, not smart money concept, real smart money, informed market professional, not just noise. At the end, we always have the same chart, but we have completely different frameworks, approaches, and of course, completely different results. Now, I want to show you two trade examples. The first one is AUDCAD from last week, that is the bias that we built together during the explanation before. And the second one is AUDNZD, that is the bias of this week. Now it's Thursday, the week is not over yet, and this was actually the trade that I took this week with the same exact strategy. Now, before for AUDCAD, okay, we can see here that this COT is of April 28th, but you remember the COT gets published on Friday and it reflects Tuesday positioning. So this is Tuesday, okay, it got published on Friday, so it's for next week. So you can see here on this calendar very quickly, April 28th was Tuesday, as we can see. This data is published on Friday. You see this data on Friday night or Saturday morning, depending on your time zone on the COT terminal sheet that I will give you access in a minute. And so that bias that we created is for the following week, because we create our bias during Friday, Saturday, and Sunday, and we trade the following week. So the week that goes from Monday, May 4, and Friday, May 8. Now, this indicator that you see here behind is one of my personal indicators that actually shows me on the background higher time frames, okay? You don't need this. This, of course, is quicker because I can see immediately that this is the week where I opened the trade that I want to show you, and this is the previous high, close, open, and low, but you can do the same exact thing very quickly. Simply, what do? We said that we do this during the weekend, so basically, this is how we would have seen the chart, okay? If this was Saturday, okay, and we were doing our analysis now, this is the chart we would see, okay? So we don't need this indicator. The only thing that we need to do, we go on the weekly time frame, okay? And by going on the weekly time frame, we simply go on the current week, and we need to put an horizontal array on the low, on the open, on the close, and on the high. That's it. Now, to trade, I personally use the 2 hours time frame. It's a bit strange, I explained about it in other videos, but you can use also the 1 hour. You can trade the 2 hours if you want. I'd recommend you to try it because it's very, very cool. Okay, so now we go on the 2 hour time frame. Again, this is still Friday. I'm on a bar replay, so it's still Friday. Where do we want to enter? This is the open, okay? We want to enter on the first level that we have available, all right? So, of course, if we want to open a buy trades, we want to open on a lower level. We want to open in, some would say, in a discount, okay? I don't like supply and demand as a concept, but that's the thing. We want to open on a low level of the previous week, basically. And if we want to go short, we want to open on a high level on the previous week. So here, if I know that this is the open and this is the low, I can place my entry very, very simply on the open of the previous week, okay? Now, the stop loss. The stop loss needs to be, first of all, at the most recent low, in this case is the week, plus you need to account for volatility. How do you account for volatility? By using another indicator. The indicator that we use to account for volatility is the XSATR 2.1. It's one of my indicators. I made this public for everyone. So you just look for XSATR, you will find it here and you add it on the chart. Now, if we are on a long trade, we need to look at the percentile down, and if we are on a short trade, we need to look on the percentile up. The percentile down basically tells you, and of course it's the same thing at the opposite for the percentile up, that 95% of all the weeks weeks in the last 60 periods, if you're on a 2 hours time frame, this is 5 trading days, weren't bigger than 122 points, okay? So basically I know that by adding this number to my stop loss, I'm covering 95% of all the volatility cases that happened in the last trading week. So statistically, we have a protection. How do we do this? We see 122. We go on our stop loss and we simply increase our stop level by 122. 312 plus 122 is 434, if I'm not wrong with math, and we just click OK. This is our actual stop loss. Now the take profit will be the previous week high if we are on a buy trade, or the previous week low if we are on a short trade. So I will put my take profit here. Okay. Now, what I would recommend at the beginning to increase your win rate, because again, the win rate is extremely important because it gives you confidence in data, you can also go for 1-to-1 risk reward ratio. Okay, you can also stick to 1-to-1 here. It's not a problem because the win rate with this strategy is very, very high. So you don't need an amazing risk reward ratio. For this example, I will show you with the actual take profit at the previous week high. So this is our complete setup. Let's see what would have happened. And there it is, take profit for 80 pips. And this trade lasted from here to here, 1 day and 10 hours, less than 2 days. It's as simple as that. Let's see now this week trade example, and as I was saying before, the strongest pair here is AUDNZD. It is higher than 25%. Yes, so this is validated, the COT is validated. We need to validate it with the economic calendar. So let's go back again on Forex Factory and we go to this week, okay? 10 to the 16th of May. Okay, today it's the 14th of May. Now, specifically, what we can see in this week that we have no news, neither on AUD and neither on the New Zealand dollar. So perfect. Okay, so we confirm also here and we can go on the chart and execute. The logic is exactly the same. This is the current week. So what I did, this is what I saw on the market this weekend before getting on the chart. Let's remove again my indicator so I show you how easy it is. I go again on the weekly time frame and I look at the open, the high, the low, and the close. So simply I will go here again. I get array and I map the low, the close, the open, and the high. Once this is done, I go again on the 2 hour time frame. And these are the actual levels where I want to trade. So as before, I want to look for a trade in a low section of the previous week. If the previous week, it's basically this one, I want to find an entry either on the open or on the low, all right? In that case, we can try with the open. So I'll put my entry basically here. The stop loss, same logic. We can see the low. And then, of course, we need to increase our stop loss from the low with the excess ATR. With the same logic, we can see that the percentile down here is 107. We double click here. From 235, by adding 107, we get 342. 342. Bam. This is our actual fixed stop loss, okay? Our take profit will be the previous week high. So in that case, will be here. And again, I repeat, you can also use 1-to-1 risk reward ratio at the beginning so you can get a bit more win rate. For now, I will just put it on the high. Let's see what the market did. Enter here, bam, take profit again. Now, theoretically, we could have been filled also here specifically on the market open, right? Now, of course, if you waited specifically at midnight, depending always on your time zone, when the market opened, you could have put the trade, but this is not very convenient because as you know, when the market opens, we have very, very high spreads because there is the rollover, okay? So usually what I do, I place my trades usually Monday morning. I am in Central European time zone, okay? So I have 4 to 5 hours of market activity, and then I usually place my trade. In this specific example, the market touched immediately our entry point, but this is not usually what happens. In fact, if we see on AUDCAD, as you can see here, yeah, basically Monday, at the end of Monday 5 p.m. To trade like a professional, at the end of the day, you need to keep things simple. What I like to say is that in trading, you need to know everything to then use few things. And you should know that trading is done professionally in hedge funds like the one I work with outside of the chart. And this is for this reason that I have my own trading terminal where I can basically control everything. I have also my personal AI that gives me bias every week. I can look at the policy rates, the risk attitude, the yield, the FX positioning. You can see all possible data because of course just knowing technicals is not enough. We need to look at central banks. We need to look at the central bank statements to see what the most important market participants are going to do. We have the COT desk where we have way more data of course than the COT terminal sheet. We can look also at the positioning of all different hedge funds with dealer intermediaries and leverage funds. We can go look specifically at all the risk sentiment. This is the FGR index, one of my main indicators, the IMD risk meter. We have the dollars mail theory. We have all the bond market inside. But this is not for sale. I'm not trying to sell this to you. I'm not trying to sell you a platform subscription because this is just for me, the traders that work with me, and the traders inside my program. So if you want to become a professional trader, the COT is just the start. Start from the COT because this is how I started as well. Then if you want to go the extra step, you will find a link in the description to have a program directly with me, one-on-one, no courses, no coaches, everything is done with me, nothing is pre-recorded, where I can take you from normal trader to professional trader, and for the best one there is the possibility to work with me and hedge fund. But before this big platform, I assume that you want the code to access the COT terminal sheet. The code for this video is 1205. So by simply going on this link here and by inputting 1205 and clicking unlock link, you will get redirected to the form to access the COT terminal sheet. Important here, you need to put your Google email. Don't rush on the link now. You need to put a Google email. It needs to be a Gmail account because the COT terminal sheet is hosted on Google Sheet. Okay, so you need a Gmail account, otherwise I can shard to you. This is automated, so just input your data and you will receive it 100%. Just be sure to select a valid email address, and the email address needs to be a Gmail account. So now you basically have everything. And remember, the best trade is not the strongest one, it's the one that passes all the filters. Your weekly process from now on will be to open your COT terminal and see the LF strength index to identify the strongest and weakest pair, use Forex Factory to validate with the economic calendar, mark the previous open, high, low and closes, wait for price to retest your levels, don't enter. If you lose the trades, no problem. Open max 1 to 2 trades per week. It's all you need. If you open even 1 trade per week and you win every trade, even with a 1 to 1.5 risk reward ratio, you're making 6% a month. 6% a month is 72% a year if you don't compound this. Okay, 72% a year, you're betting every hedge fund on Wall Street. Okay, so use logic, trade with intent. Always quality over quantity. I would say start with a 1-to-1 risk to reward ratio because, as I said in my video about risk to reward, I think that is very important to build confidence. You need to have a high win rate so you can have a lot of data to make sure that you are profitable. Use this strategy correctly because, as we saw at the beginning, I have now students that actually passed their first challenges and got payouts even before getting into the program just with this strategy. And then if you're ready for the next step, again, you have the link in the description to have a full program with me. Thank you for watching. Always trade smart and use your head, and I'll see you in the next one. Peace.